Good morning, everyone. Welcome to another episode of the Mizuho Week Ahead. I'm Jingwen, market economist at Mizuho Bank. This week's theme is Optimism, Ambiguity, and Lingering Pressures. Last week, risk sentiments saw slight improvement as markets took comfort from moderate US economic data and softer oil prices, even as Fed uncertainty persisted. AI developments drove swings in sentiments, with compute demand and valuations being questioned. China's Zhipu AI reportedly matched the performance of Anthropic's latest frontier model at a fraction of the cost, while Meta is exploring a cloud business to sell computing power. Labor market robustness was challenged by data. Non-farm payrolls were softer than expected, and even the lower unemployment rate was a result of lower labor participation rates. The leisure and hospitality sector shed jobs despite the World Cup, but hiring in the white-collar sectors remained robust. Markets pushed back expectations of near-term rate hikes. At ECB's Sintra Forum, Fed Chair Kevin Walsh stuck to his no forward guidance approach, providing nuanced views. He acknowledged easing inflation risks while reiterating the Fed's commitment to price stability, leaving markets to calibrate policy expectations around incoming data. He also reiterated preference for balance sheet reduction, arguing an unwind of nearly 2 decades of expansion will take longer than weeks. Additionally, he acknowledged that AI is currently driving a sizable capex boom, though he said its supply-side effects will emerge at some point. ECB officials offered little consensus at the forum, despite a softer Eurozone inflation print last week. PMI data showed some stabilization in business activity in the Euro area in June, following 2 months of moderate decline, while input cost inflation cooled to its softest pace since February. The combination of softer input costs and lower June inflation could strengthen the case for the ECB to pause, particularly as policymakers remain split on the need for further rate hikes, despite last month's unanimous 25 bp increase. Easing geopolitical concerns also helped sentiments. US-Iran technical talks began in Qatar last week and are now on pause, with the talks set to resume after funeral proceedings for Iran's former supreme leader Ali Khamenei concludes on 9th July. Meanwhile, OPEC Plus announced quota increase for August is small, with likely measured price impact. Chances for aggressive OPEC Plus supply ramp-up is unlikely to be sustained, given many producers' limited tolerance for sub-US $70 oil prices. In Asia, EM Asia FX stayed under pressure despite lower oil prices, weighed by elevated USTUs and uncertainties on multiple fronts. The yen failed to benefit from softer crude amid limited BOJ tightening that revived carry trade pressures. Japan's MOF likely intervened after the dollar-yen sustained weakness above 162, but weakness may continue to creep in as external pressures are unlikely to dissipate. RBA minutes flagged housing softness and suggested scope to remain on hold while assessing tightening. Indonesia and South Korea CPI edged higher as earlier elevated oil prices filtered through. Looking ahead, markets will focus on FOMC minutes for further clues, though much of the hawkish vibes may have already been played out. Nonetheless, affirmation of smaller balance sheets and inflation woes may assist to backstop USTUs and the USD. US-Iran negotiations remain key for oil and risk sentiments. In Asia, Bank Negara Malaysia is expected to keep rates unchanged amid a contained inflation and steady growth outlook. All in, markets found support from moderate US data, softer oil prices, and a less hawkish reading of Fed. But uneven underlying details and pressured EM Asia FX signal lingering caution. For more information, please refer to our Week Ahead publication or contact your respective sales desk and RMs. And for regular notifications on our market views, please subscribe to our channel and hit the notification button. Thank you.